Hey there, welcome back to the channel. In today's video, we are going to talk about 12 record-keeping guidelines. Now, this will actually be part one. We're not going to try to lump all of this into one video because what we want to do is we want to give you some guidance on getting your stuff together. That's probably the biggest challenge for all of us is finding our stuff. So we're going to talk today in this video about what documents you need, why you need them, and then we're going to do a follow-up video, which we'll link the second video here at the top so that you can watch it next. And we're actually going to go through and build a mobile file system. Now, if you have a system that works for you right now, please don't change it. There's no need. If it's working well, we don't want to disturb it. But, we talk to a lot of clients who do not have their stuff together. They might know, oh, this is here and that's there and this is in the safe deposit box. And there's not anything really wrong with that, with the exception that as we get older and collect more stuff, make more investments, buy more property, nobody's promised tomorrow. And it makes it much easier, much easier on a family when they find themselves in a situation where they've lost a loved one. It's so much easier on them if things are in order as best as they can be. So we're going to talk about 12 record-keeping guidelines today. And then again, we'll see you in the next video and we'll share with you a system that works great for me. And hopefully it will work well for you as well. So let's get into our first record-keeping guideline, which happens to be tax returns. Now, I actually have, oh my goodness, I don't know how many years of tax returns I have, a lot. But the statute of limitations for tax audits, IRS tax audits, is 7 years. I will say that if the IRS suspects tax evasion, there's no statute of limitations. So, if you've been to your local bank and applied for a mortgage, they generally ask for like the last 2 years of tax returns. So certainly 7 will meet that requirement very easily. And please remember that as you are either making copies or grabbing copies of these documents, that you're also attaching or grabbing copies of W-2s or any attachments that were in that tax return. So make a full copy. That's probably the best way to say it. All right, so moving right along to our second record-keeping guideline, retirement accounts. Now, there's all kinds of retirement accounts. There are 401ks, 403bs. We've talked about that in a recent video. A 401k is a retirement plan for a for-profit organization, and a 403b is for not-for-profit organizations. There are IRAs, and of course they come in traditional versus Roth. So there's a couple of different kinds of IRAs. So you may even have SEPs or other types of retirement accounts, but just get your hands on a copy of the most recent statement for every retirement account you have. And then in our next video, we'll talk about how we want to organize those. If you are married or you have a partner, certainly grab yours as well as theirs. And that way you'll be ready to build out your file system in our next video with all of those readily at hand. Now, I will say that in most retirement accounts, especially like 401ks and company-sponsored plans like that, you might be receiving a quarterly statement from those plans. So we highly recommend that you keep the current year's quarterly statements, and then often what happens is they provide a year-end statement and it summarizes the entire year. So that would be an opportunity for you to take the quarterly statements, shred them, emphasis, shred them, do not throw them away. And a quick shout out to our local Goodwill certainly where I live in the United States, you can take all of your documents to Goodwill and they will shred them for you for a much more reasonable price than some of our big box office product stores. We won't mention them here, but anyway, there's a tidbit. If you're looking for a place to shred and you don't want to break the bank, check your local Goodwill. Okay, so again, quarterly statements at the end of the year, when you have that annual recap statement, you can take those quarterly, shred them, and you're not going to, end up with this crazy bunch of documents over time. So that's where we are with retirement accounts. The third record-keeping guideline is going to be Social Security. Again, if you're married or have a partner, you're going to want your most recent Social Security statement for each of you. Now, in the recent past, Social Security made an announcement that they were going to stop mailing the Social Security reports, the printed paper reports. Now, it's been some time ago, and I tell you, I just had a client in my office this week who brought one in that he received in the mail. So I think what's probably happened, his wife was with him and she had signed up online for an online Social Security account, which I encourage everyone to do. It's very easy. The website is ssa.gov, and you'll do some verifications, and then you'll have this online account where you can go in and check your Social Security benefit, your future Social Security benefits at any time, and it's really handy if you are needing to do some planning. So ssa.gov, if you haven't signed up online, you might want to do that. And again, if you haven't signed up online, you're probably still getting your paper report in the mail. So if you've got a paper report that was mailed to you, grab your most recent one. If you're an online Social Security account person, then print out your most recent Social Security statement. Now, in case you're just wondering, well, why would it change? Well, if you're still working, okay, some of you may not still be working, or maybe, you're out of work for right now, but if you're still working and you haven't retired and started your benefits, obviously you're still paying into Social Security Administration, which means your benefits are still growing. So this is an item that we would want to update annually, and then again, shred the prior one, okay? All right, perfect. By the way, if you do not have access to the computer, now, if you're watching this video, I'm guessing you probably have access to the internet, but if not, the telephone number, if you want to talk to someone at Social Security instead of going online, is 800-772-1213. All right. So our next item that we want to make sure we have readily available to us, statement-wise, are investment accounts. Now, again, there are various types of investment accounts, and so you're going to want to gather all your statements, regardless of if it's a stock account, if it's a college 529 account for your child, if it's real estate investment. We'll get to that in a moment. But your bank accounts, right? Any type of investment account, annuities, things like this, you're going to want to get your most recent statement and get that ready for our filing system that we're going to talk about in our next video. Again, quick reminder, if you are married or you have a partner, you're going to want to grab statements for them as well. All right. Now, checking and savings will be separate and apart from investment accounts. Investment accounts are often they don't typically have as much liquidity as a checking or savings. So meaning an investment would have to be sold, and it might take some time for you to get the proceeds from that sale. So an investment account doesn't have the liquidity that checking and savings would. So they're going to be kept in a different area. So checking and savings, again, you might have a checking account with your spouse or partner. You might have an individual checking account. You might have a business account. Again, if you are a business owner, a lot of these documents are the same, but I am going to recommend that you don't commingle them. So set up a separate system for a business if you're a business owner. And today we're basically just focusing on personal investments and record keeping guidelines for individuals. Okay, next is household accounts. Now, household accounts, you might think, well, what's a household account? Well, these are going to be things obviously that impact your home. So you probably have, if you're a homeowner, you probably have a deed. Now, if you're still renting, you're not going to have a deed, but you're going to have a lease contract, right? You're going to have a lease agreement. You need to keep a copy of your lease agreement handy at all times. You need to make sure that your receipt for your deposit, because more than likely, if you are renting or you've leased a home or apartment, you probably had to pay a damage deposit. And so make sure you keep a receipt. Wouldn't recommend that you pay those items in cash. But if you have to pay them in cash or you feel like you want to pay them in cash, make sure you get a written receipt. Put that in your file in case you ever have to prove that it was paid. Obviously, if you are paying by check or debit card, you'll have a receipt via your bank account. So with the deed, again, the original deed is going to be kept in a lockbox. Safe deposit box. You might have a safe deposit box at your local bank. You may have a fireproof safe in your home. That's perfectly fine as well. But the original does need to be in a safer, more protected environment. So we're looking for a copy of your deed, and you'll put a copy of the deed again in the filing system. Now, if you're saying, hey, Jonda, we bought our house 15 years ago and I don't have a clue where our deed is. If you can remember the attorney that did the closing on your property, then they would be able to assist you in getting a copy of the deed. If you can't remember the attorney, if you can remember the real estate agent, again, if you can just kind of retrace your steps to those people and companies that were involved in your closing, you can get a copy of your deed. And obviously, worst case scenario, you can go down to the courthouse and get a copy of your deed by yourself. Some courthouses may charge for copies of that, but certainly you're entitled to that. Something else to keep records of in this household account section are any home improvements. So, receipts for major, and I emphasize major home improvements there. So if, it's really trendy right now to put in these amazing backyard entertainment, pool, deck, exterior kitchen, and that would obviously be a major upgrade, a major renovation to a home, and it would be fairly costly. So you want to keep receipts for things like that, because down the road, when you go to sell your home, if you do, you are going to want to be able to establish an addition to your basis. The basis is what you paid for the home. All right, so you paid whatever. You paid $150,000 for the home, and you put another $50,000 in the backyard, upgrading the property. So you have $200 in the property. If you would sell it for $200, there should be no gain. Whereas you might think you made $50,000 because you paid $150 and sold it for $200, but you have this major investment, this major renovation, and you can document your cost for that. So major upgrades to home, major home improvement, you are going to want to keep receipts for that. Another item in this section is going to be a HELOC. That's a short abbreviation for a home equity line of credit. So some of you out there may have your homes paid for, but you decided to use some of the equity in the home to maybe put in that new backyard. And so you may have a home equity line of credit. And if you do, just make sure you keep your most recent statement in our system that we're going to create to make it easy for not just for you if you need to refer to it. But again, someone else who might find themselves in the position of having to help you with your finances, or actually process an estate at some point in the future, since none of us are getting out of here alive. All right. Next on our list is going to be credit cards. Now, some of you are going to say, I don't have any credit cards, and that's great. However, I do think that it is important, especially for women, and we again will have another video on that, as far as what type of credit and how much credit should you have. So if you don't have any credit cards, you might want to get one. Some of you might have way more than one, and you might need to consolidate. But whatever credit cards that you have, again, most recent statement, and actually, in my opinion, for the monthly statements for the current year. Now, here's what I like to do with those. I know some of you use your credit cards for this reason. I have a lot of clients who will use, I think it's American Express, and some others that award points. You can earn flying, airfare. You can earn hotel stays and all of that. What do they call it? Air miles. And so nothing wrong with that. If you are disciplined to put all of your monthly expenses on a credit card and then pay that off every month so that you can earn miles or hotel stay and save money on vacations and so forth, excellent. Knock yourself out. That is great. But some of us are not that disciplined, and so we need to reel that in a little bit. But it's really cool if you keep these statements for the entire year in an area that is readily accessible. When you go to file your taxes, you can really quickly go back through that statement and see what you spent your money on. And if it was an expense that can be deducted, then you easily have a record for that. So keep those credit card statements, current year monthly statements readily available. And when you do go to file your tax return, you can take those for that year, put it with your tax return, and you can start over for the new year. Okay, now the next category is going to be what we call other liabilities. This is going to be, well, it can really be a number of things. It could be a car loan. It could be a student loan. It could just be a personal loan. Maybe you got a consolidation loan. But any other liabilities that you can think of, what we want you to have access to or have a copy of is any loan document. So this is going to be a document that tells you what your interest rate is, tells you what your monthly payment is, and it tells you how many payments you have, plus how much you borrowed, and ultimately how much you'll pay back if you take the full term to pay it back. So go ahead and get your hands on any loan documents for what we would call an other liability. Student loan, car loan, personal loan. All right. Now, most of you probably know that we are all entitled to a free credit report from all 3 credit bureaus every year. And if you are not getting those, you need to do that. All right. So you're going to go to annualcreditreport.com. It's very easy. Annualcreditreport.com. And again, I know you're watching the video, so you probably have access to the internet, but if you would rather call, their number is 877-322-8228, and you can request your free annual credit report from all 3 bureaus once a year. And it's very important that you do that because, unfortunately, you and I are the only ones who can fix a problem on our credit report. We might not have created the problem, right? There's lots of fraud. There's lots of things going on in our world today. So we might not have created the problem, but I'm telling you, no one's going to fix it except you. I know there are credit repair companies out there. Be careful. I haven't really read any good reviews on paying someone else to fix your credit. On the other hand, I have watched some really cool videos recently where there's some tips and tricks for us as individuals and things that we can do to bring our scores up some points and clear up things that might have gotten a little muddy because somebody did something that they shouldn't have done with our social security number or our credit cards or bank cards. So be sure, don't just order your credit reports, read them, okay? You need to go through there. It's not that difficult to read a credit report. Now, I understand I've been doing this 35 years and my career started out in banking and I looked at a lot of credit reports. So I get it. I've read a lot of credit reports. You haven't, but I'm here to tell you they're not that difficult. You're going to go through the list of open accounts. And if it says that you have a Chase credit card and you've never walked through the door of Chase Bank or never gone online and applied for a Chase credit card, that should be a red flag for you. Okay? So you get the annual credit report, you review it. If you find a problem, there is an entirely separate process for disputing things on your credit report. But again, nobody's going to fight it for you because, to be honest, nobody cares but you, right? So make sure you're getting your credit report, you're reading them, and if there's anything on there that is not correct, you need to file a dispute and follow up. Okay, our next area is going to be insurance. Now, I don't know what you thought of when I said the word insurance because there's a lot of types of insurance. There's car insurance, there's homeowners insurance, there's health insurance, there's some cancer policies, there's Aflac, there's life insurance. So depending upon what types of insurance policies you have, go get a copy of what I call, well, it's not what I call, it's actually the name of it. It's called the DEC page, the declaration page of your insurance policy. So basically, it's a summary of what your policy covers. Okay, so if it's your homeowner's policy, it's going to state the address of the property, and it's going to say you have so much on the structure. If you experience a fire or a natural disaster, it's going to have so much coverage on the interior, your interior possessions, furniture, and things like that. You might have a rider for your jewelry. That's called a declaration page. And so grab a copy of the DEC page of all your insurance policies and keep those readily available. Some other types of policies that I didn't mention, there's actually renter's insurance. You might have renter's insurance. There's long-term care insurance for those of our clients who are a little bit older and might be preparing for long-term care expenses down the road. There's also disability insurance. So any type of insurance policy that you currently pay for, make sure you get a copy of the DEC page and have it readily available. Okay. Now, some of you watching this video may not have this next document yet, but you should think about getting it soon if you don't. Okay. This is the family will or trust. So all of what I'm going to call your final documents, and might not be fun to talk about, but listen, most of us watching this video are adults, and if you're not, you're going to be an adult really soon. And it's our responsibility to take care of our finances, and that includes preparing for what happens to our assets when we're gone, because again, none of us are getting out of here alive. So if you do not have a will, a power of attorney, a living will, and a medical power of attorney, those are like, well, we call them the sister documents, but those are like at the very, very base of everybody's financial plan. So I'm not a huge fan of a will. We'll get into that again in a later video. But at the same time, there is a certain type of will that I have. And so you need to tell people where do you want your stuff to go if you don't wake up tomorrow. right? And some of you will be able to do that in a will, and that will be sufficient for you. Others might need a trust or want a trust. You know, it's not always about needing it, but wanting it. And there's pros and cons to both sides of this. So any final planning that you've done, wills, living wills, powers of attorney, medical powers of attorney, trust, whether it be revocable trust, irrevocable trust, it might be a special needs trust for a child that you want to provide for if you happen, you know, to pass sooner than you would like to. And so any type of final documents that you've had prepared, letting people know where you want your stuff to go after you're gone. Copies, emphasis, copies, because those documents, the originals of those documents, need to be in a safe place. So whether it's a safe deposit box at your local branch for the local branch of your bank, or again, if you have a fireproof safe in your home, that's fine. But for what we're talking about here today, and what we're going to talk about in our next video, where we're actually kind of building a system, if you will, to keep these documents and have them readily available, then you're going to want to use copies for that. Now, the next area will be children's accounts. So again, I think earlier I actually did mention 529 accounts in the investment category. So let me just restate that item should be in the children's account file. So you might have a savings account for your child. You might have an UGMA, a Unified Gift to Minor account. I think most of those are gone by now, but you might. And so any account that's been set up for your child, savings, investment, or 529 college plan, you're going to want to get a copy, again, of those most recent statements. Those should be quarterly as well. And then once you get the year end and recaps the current year, take those out, shred them, and then start again for the new year. But always keep that year-end statement for as long as you've had the account. And that applies to the previous section on investment accounts that we were talking about earlier. So always keep your year-end statement, which summarizes all the activity for the prior year. Always keep that in your file. It's those quarterlies that come during the current year that once you reach the year end, you can remove those and shred them so that your files don't get just out of hand. Okay, so again, at the year end, so that, by the way, that summarizes, that's our 12 record keeping guidelines. And at the end of the year, what I like to do, and I think I mentioned this already, but what I like to do is any category like the credit cards I mentioned, where I might use that information, the transactions each month, I might use that information in my tax return, whether it's for a deduction or something like that, a contribution, charitable contribution or a donation. So I'm going to take those records and I'm going to put them with my tax return records, which again is going to go back to the very top. We talk about tax returns and go into the current, the most recent tax return file. So this system is alive, okay? It's not set it and forget it. But let me say, once you do get your stuff together, find all your stuff, I tell people, once you find all your stuff, and once you go through the next video and actually put it in a system, and then when the mail comes in, you just update, right? If you get into the habit of regularly using this system, it almost becomes a set it and forget it at that point, because then you're into a routine and you can go to this filing system, again, that we're going to create in our next video, and anything and everything that you should need regarding your finances, you're going to have at your fingertips. So the other thing that I will mention is we do have the 12 record keeping guidelines in a PDF format. And so I will link in the description box below how that you can access that and print it out if you'd like to have a paper copy of it as you are getting your stuff together. So thanks for watching. If you enjoyed today's content, please let us know in the comments, and don't forget to like, share, and subscribe. See you in the next video.